only which will be sent and transferred to the, okay, the transferred to the group of persons only. At the same time, this service and this product is also transferred to and is sent it to the group of person. And next one, individual lending. So individual lending model is also loans or if any financial service and if any financial product is also sent to the only individual borrowers. Individual group of lending model which is related to the group of person, and individuals means which is related to the individual borrowers, and joint liability group means which is the means variety and more than two members will be group lending means where borrower are jointly liable for the loan repayments. So that is the joint liability group. So one is that what is the facing of the microfinance in India? What is the challenges of the microfinance in India? One is that regulations of the regulatory challenges. So regulatory challenges means if you any means that is that uh, means that is that requirement of the regulations, and you filling that fill that some step by step process and attach it that which is related to the documentary. And next one, competition. After that, risk management. So microfinance, it is that very related, which is related to the risk, very high risk when compared to the commercial banks and other financial institutions. Future of microfinance in India, digitalization means nowadays you see that so every transactions only through the online payments, every transfers is also through online, that is the digitalization. And expansion of the business operations, one area to another area and one country to another, and expand the one state to the another. So that is expansion to the not only particular area, this is expansion to the various areas. Okay, next one, it is that increased focus on financial inclusions. So which is also provides to the infrastructure, financial infrastructure to the rural areas as well as the urban areas. So that is the total futures of the microfinance in India. Then products and services of the microfinance. So products and services of the microfinance. So microfinance institutions is also offer the financial products and financial services designed to meet need of the low income individuals or entrepreneurs and the small business. So which is the provides to the financial products and services to the individuals, at the same time low income populations, at the same time entrepreneurs and small business or small enterprises. And what is the financial products? One is that micro loans. So micro loans, it is small loans provided to the individuals or group of for income generating activities such as the agricultures and living stock, small business. So that is the micro loans. So the microfinance institutions which is providing loans to the individuals. So for the purpose of the income generating. So this type of funds and this type of the resources on invest on the agriculture, invest on the stock, living stock, and invest on the starting of the small business and small enterprises. So that is the one of the product of the microfinance. And next one, savings account. So savings accounts means deposit accounts that allow clients to save money safely and earn the interest. For example, if any individuals have that much amount, say they can deposit in that accounts. So which is that safe and means safely and earn the interest rate certain amount. That is the principal. The sum of interest on will get on the on principal amount. So that is that actual amount. So that is the one of the product which is related to the finance, microfinance, savings account. And next one, micro insurance. So insurance products designed to protect the clients against the risk such as that illness, injury, or death. Okay, if any person due to any reason, will we get that insurance. So this is also microfinancial institutions also provides to the financial products which is related to the insurance. So insurance is also helps to the individuals or clients. So means it is a design to protecting of the clients against of risk, and that is the risk such as that if any illness of the clients or if any death of the client or if any injury of the client, if which is also related to the so insurance is also again divided into two categories: life insurance lic and gic. Life insurance which is related to the help to the person and the individual, and the GIC which is also provides to the other than person, means which is related to the car insurance, vehicle insurance, goods insurance. Okay, if for example if any goods damaged due to fire accidents, will we get the some percentage of the means compensation. And at the same time car accident due to means car accidents, car damage due to any reason, so will be getting that compensate from the insurance companies. So that is that this type of the products is also provided by the microfinance institutions, and it is also one of the product of the finance microfinance. And next one, it is that remittance. So services that enable that clients to send the receive money domestically or internationally. So remittance it is also providing services, means that is the means clients to give clients and receive the money and domestically and internationally. So that is also another product. And next one, what is this is now means now financial service which is related to the only relate money purpose and wealth and generating of the income. So that is the financial products. And next one, what is that non-financial services? So non-financial services means that is the business training. So that is also one of the non-finance service. So business training, for example, training programs that equip clients means with the business skills, which will be give that business skills and which is also gives the related to business ideas for the entrepreneur and startups. And next one means some ideas and some ideology is also gives to the marketing department, and the information is also gives to the financial resources, how to allocation of the financial resources of various departments, and how to utilizing of the financial resources in effectively and efficiently for future course of the actions. So it is that is the one of the part of the training program. Okay, that is training program. And for example if the new coming of the entrepreneur and the new joining of the employees will be must give to the training regarding to the if any job related different types of the departments. So the financial management is also explaining of the how to managing of the financial resources. Marketing department will be give the how to selling and purchasing buying of the products and services in particular markets. So this all the training is given by the microfinance. And next one, it is that financial literacy. So financial literacy, it is that education program. My financial literacy means educational program that teach the clients how to manage their finance effectively. So, okay, for example, the some type of the funds is spent on the education. So manage their finances effectively and including budgeting, savings, and investing. So that is also one of the non-financial services. And next one, health and wellness. So health and wellness services that promote that health and wellness, such as the health insurance and medical checkup and health education. So which these all are the non-financial services. Next one is that social services. So social services that address social issues next to such as that education, housing, and community development. So these all are the non-financial services. First, business training, financial literacy, and health and wellness, and social services. So health business training, they are conducting the some programs, and they are conducting the training programs in workplaces. And financial literacy, sometimes they are some of the percentage of funds are spent on the educations, and give the some teach the clients how to means how to managing of their finance effectively. So that is that financial literacy. And will be providing to the health insurance and the wellness of the clients. At the same time, they are providing the good environment at workplace. Okay, next to promoting, this is the main objective, promoting of wealth and health and wellness. Next one, it is the social services. So social services other than financial service means will be providing of the educations and providing of the health insurance and providing of the community development. Next one, digital financial services. So digital financial services, mobile banking. So what is that digital finance mobile banking means services that give that clients to access the financial services using their mobile phone. Means if any transactions and if any information or if any transaction, if any payments sent to one person to another and one place to another, one place to another place, this is only through mobile banking on mobile phones. So next one, it is the digital payments. So digital payments means that is a service that give the clients to make the payments digitally, and such as using that mobile money or online payment platforms. Online payment platforms, you know that what is the UPI, next one, Phone Pay, Google Pay, Paytm. These all are the online payment platforms. So digital payments. So that is also one of the services provided by the microfinance institutions. And next one is the online other loans. So loan that are means disrupt and repaid online, often using the digital platforms and your online loans. So nowadays, some of the institutions also loans are provided through the online, and this is also means payment of loans also through the online platforms, and it is the using of many online platforms. And digital savings. So digital saving account that can be managed also digitally when using mobile apps or online platforms. Mobile apps like that, Phone Pay, GPay, Paytm, these all are the mobile apps. That is the digital savings. And next one, other services, financial services, which is related to the finance and providing of the funds and providing of the loans to the individuals and clients for generating of the income. That is the financial microfinance. And non microfinance, which is also provide to the training programs and training conducted to the client for the clients, and give the literacy, financial literacy. Next one is the means the health and providing of the wealth insurance and providing of the some non-financial products to their clients. And next one, digital financial services. So how to every actions only through online platforms, and every transactions through every transactions through mobile apps. That is that mobile banking. And next one, it is the digital payments. And next one is the online loans. And next one is the online loans and digital savings. And what is that other services of the financial, other services of the microfinance? So microfinancial institutions is also provide that not only financial service, not only non-financial service, they are providing of the some other services also. That is that first, agriculture services. Okay, agriculture services, microfinance institutions is also providing the agricultural services that support the agricultural activities, means such as the input supply and extension services and market linkages. For example, input supply. So input supply means that is the raw materials. Raw materials are sent to the who need of the resources. And extension services means that is the providing of the transportations, providing of the goods, means store for the storage of the goods. And next one, market linkages will be providing the information about that market cost and every individual commodity in market price information and individual goods price information, and these all are the means so that is the area locations and area information which is also provided by the microfinance to their clients and their agriculture means farmers. And next one is the living stock services. So service is also, this is also providing of the another services which is related to the stock market, means living stocks. That is the varieties of the service veterinary services and feed supply and market linkages. Veterinary service which is related to the animals, and feed supplies, and it is also means supply, it is also one of the funds, and service is also provides to the means milk products, and market linkages means it is also connection to one market to another market, so providing the information to the agriculture sectors. And business development services. So business development services, it is also support to the business growth, and which is such as the business planning and marketing and financial management. So first one, it is the business planning, how to make the planning for the particular project. Okay, there are three types of the project. One project will be give that more returns, less risk, and another project we have the same risk and returns also, and the third project is also very high risk but will be give the less returns. So which type of the project you will be selected, so which type of the project will be give that more returns. So this type of the information can be analysis and will be take the decisions. So this is the business planning, so which is also provided by the microfinancial institutions. At the same time, marketing which is also we will be supplying of the goods and services their consumers needs wants. So what type of the consumers are preferred mostly in market, and what type of the product have that main demand supply in that market. So these all the content is the analysis and will be take the decisions. So and after that will be producing of the goods and services. Next one, it is the financial management. So financial management, how to manage the financial resources, and how to invest on the investment of the financial resources on various projects. So how to utilizing of the financial services of the various programs. So these all are the informations, and these all ideologies is given by the microfinancial institutions. And next one, it is the community development. So community development service, it is also providing such this type of the service, the support to community developments, such as the one of the educations, and it is a main service is provided to in the rural areas or remote areas, such as that educations, health, and infrastructure developments, that is the community developments. So more funds are spent on that education, after that will be spent on the health, and the next one will be spent on that infrastructure development. So these all are the other services: agricultural services, livestock services, business development services, and community development service. These all are the other service provided by the microfinancial institutions. Next, microfinance institutions, their regulations. So microfinance institutions are regulated by various authorities to ensure that they operate in the safe and sound manner, and they can be operate and they can be managing of the safe and sound manner means, and that they provide fair and transaction services to their clients, and we will be give the fair information, and they will be give the true information to their clients, and they can maintaining of the safe and sound manner, which is related to the regulations of the microfinance. And regulatory framework. What is the framework of the regulatory? That is the Reserve Bank of India. First one, the RBI is the main prime regulatory of microfinance in India. RBI means that is the Central Bank of India. That is the RBI, Reserve Bank of India is the prime regulatory of the microfinance institution in India. And next one, it is the Microfinance Institutions Development and Regulations Act. That is 2012. Microfinance Institutions Development and Regulations Act 2012. So this act is also provides the framework for the regulations of the microfinancial institutions. So these are act is also providing all the information, all the required documents and required steps is providing this act for the regulations of the microfinancial institutions. And next one is the state government. So state government also play to the one of the role regulating of the microfinancial institutions. So particularly in areas such as the licensing and registrations. So these all are the regulatory of framework. One is the RBI, Reserve Bank of India, that is the prime role playing for the registration and regulating of the microfinance institutions. And next one, it is the microfinance institution, that is the development of regulatory act 2012, which is also providing that all the information, and which is also providing all ideas and step by step process. And next one, state government is also providing some information to the establishment and regulating of the microfinancial institutions. And what is that licensing and registrations? So licensing and registration, RBI licenses. So microfinancial institutions must obtain a license from the RBI to operate. If any actions or if any operating of the activities, this is also licensing taken from the RBI. You must take then licensing from the RBI. RBI to operating of the activities and operating of the operations. And next one, registration with the state government. So MIF means micro financial institutions must also register with the relevant state government. Okay, relevant, for example, Telangana. So which is also registered with the Telangana state, and relevant to Telangana state. And for example, if any other state, AP, Andhra Pradesh, which is also registered with the Andhra Pradesh state. So every organization means if any microfinancial institutions must also register with the relevant state government. So the next one, it is the registration with the register of the companies. Microfinancial institutions must register with the register of companies. Means register of companies means that is the head office, that is the register of the company, and that is the licensing and registration process. First, which is the license is taken from the RBI, and which is also must registered with the relevant state government, and it is also registered with register of the register companies. And next one, prudential norms. What is the prudential norms means? That is the requirement of the requirement of the documentation and requirement of the parameters. First one is the capital advocacy. So microfinancial institutions must maintain the minimum capital advocacy ratio. So they must be maintaining of the financial percentage, and margins must be maintained, that margin that is the minimum maintaining of the minimum capital advocacy. So, for example, in case of the single proprietorship, so they can be maintaining of the minimum 50,000, and partnership they can be maintaining of the 1 lakh. And for example, companies, in companies also maintaining of the minimum capital ratio, that is the 5 lakhs or 2 lakhs. So that is the, in the same time, in case of the microfinancial institutions, also maintaining of the minimum capital ratio and the minimum capital advocacy. And next one is that liquidity. So every microfinancial institutions must maintain the minimum liquidity ratio. Minimum liquidity ratio is also given by the microfinance institution, that is the development of register act 2012, will be maintained, means disclose of the and disclosure of the minimum capital advocacy and minimum liquidity ratio. And next one, asset quality. So microfinancial institutions is also maintain the minimum asset quality ratio also. And this is also maintaining of the minimum capital ratio, minimum liquidity ratio, at the same time minimum asset ratio. And provisioning means microfinancial institutions must make the provisions for bad debts. Provisions for bad debts means it is not recoverable of the amount. And next one, client protection. So one of the client protection, fair practice code, microfinancial institutions must adhere to fair practice code, and means will be maintaining of the one of the code. And transparency, every actions and every operations in the transparency, so we'll providing transparent and clear information to the clients. Transparent information, clear information, and fair information to the clients. And next one, client grievance redressal. So microfinancial institutions must have a client grievance redressal mechanism. So that these all are the client protection. And reporting requirements. So what is that main reporting requirement of the microfinance in India? That is that annual reports. So every microfinancial institutions must submit the annual reports into the RBI. So it is the annual report. This type of the report is made which is related to the annually and made annually. So the every microfinancial institutions, it must be submitted to the RBI. And quarterly reports, which is the within the 3 months. So quarterly is also must be submitted to the RBI. At the same time, audited financial statements. So microfinance institutions is also submitted audited financial statements to the RBI. Financial statements means that is the profit and loss account and balance sheet. So for profit and loss account is know that profit or loss, and financial balance sheet we knows the financial position of the organization. So which is also providing the annual report to the RBI. It must be quarterly report is also submitted to the RBI, and it must be financial statement is also submitted to the RBI. Next one, supervision and enforcement. So on-site inspections. So the RBI conduct the on-site inspections, inspections of the financial microfinancial institutions. Sometimes RBI is also conducted the some inspections to in that microfinancial institutions, and it is also take the every information, and it is also take the every clarification by the microfinancial institutions, that is that audited. And next one, off-site monitoring. So RBI monitor that financial institution, microfinance institutions off-site through regular reporting. They can they send the every report to the RBI. They can send the every information, each and every information, and each and every report is also sent to the RBI by that microfinancial institutions. And next one is that enforcement of the actions. So the RBI takes the enforcement actions against the microfinancial institution that violate that regulations. So these all are the supervisions and enforcement of the microfinance. So today I discussed what is that situations of what is the role of the microfinance in India, what is the challenging of the microfinance in India, and next one, what is the products and services of the microfinance in India, and what is the regulations and reporting there in India. So these all the topics are discussed in now. So again, will we discuss revision of this microfinance in institutions in India. That is the one of the regulatory framework, and it must be registered with the RBI, and it must be registered with the relevant state government. He must be registered with the means that is that regulatory of the Companies Act. Okay, every financial microfinance institution, he must be connected with the RBI. So they can send the every transactions and every report to the RBI, and sometimes RBI is also conduct the audit, and sometimes RBI is also conduct the inspection in the microfinancial institutions. So means it is also licensee is taken from the RBI. At the same time, register is also relevant of the some state government. And prudential norms, what is the documents and prudential norms, what is the maintaining of the ratios, the must be maintaining of the capital advocacy ratio, and capital advocacy ratio, it must be maintaining of the liquidity ratio, must be maintaining of the asset quality ratio, and it must be maintaining of the provisioning. Means that is the, for example, liquidity is also maintaining of the minimum 50%, and capital advocacy ratio, it is also maintaining of the minimum 40%. The asset quality, it is also maintaining of the some 60%. So that is also prudential norms. And client protection, so microfinancial institutions also provide the client protection, that is the fair practice code, and will we give the one of the code to the client, their clients, and transparency, will we give the clear and transparent to the their clients. Next one is that client grievance redressal, means this is the how the client, if any grievance redressal mechanism, will we give the dispute of the their issues. This means if any disputes are arising, they can solve the only this type of the redressals. And reports also requirement, every annually they can spend the report to the RBI, every quarterly they can spend the report to the RBI. And next one, audit financial statements is also sent by the microfinance institutions to the RBI, means that is the previous 3 years financial statements, means profit and previous year 3 years profit and loss account, 3 years profit balance sheet. So this is also provided by the microfinance. So again, totally this is the whole microfinance in India. First, microfinance in India. First of all, what is that microfinance? So microfinance, it is that one of the small institution, and which is also, it can be category. It is also providing financial product and services to their clients, and it is also divided into different categories. One is the based on the ownership structure, business model, and target markets. One is that NGOs, non-governmental organizations. So this is also owned and they have operated by the NGOs, and it is also focused on the social mission and poverty reduction. And corporate, this is also donations and grants is given to the society. And next one, cooperative of the microfinancial institutions. This is also owned and controlled by the members. So it is not profit organization. So this is only providing the service of to the society and providing only service. And commercial banks. So it is also operated and owned by the commercial banks. this is also micro services of part of their overall banking business. So banking is also not only provide to the financial product, it is also providing of non-financial products also. That is a consultancy service and providing of the other locker rent it is also providing of some facilities to their clients. So the microfinance of the activity is also one of their overall business transactions. So microfinance banks and credit unions, village banks. So village banks, which is also providing only villages and online microfinancial institutions. So online microfinancial institution using the digital platforms to the provide the microfinance service. And it is also focusing on reaching of the unreserved population through digital channels. And self-help groups also I discussed yesterday. The next what is the characteristics of the self-help groups? So that is the voluntary membership. It must be voluntary membership and a group of voluntary and participate their decision making process and they solve the common problems. And a small group size also, it is the between 10 to 20 members, and that is the common goals. So every member share common goals such as the economic development and economic empowerment and social justice and community development which is related to the education, health and wellness, and self management, self managed and with the members taking that responsibility for decision making and problem solving. So benefits means what is the benefits of the HGC self-help groups? That is the economic development, one of the benefit, and social empowerment and community development and support network. And what is that activities? It is also providing savings and credits and income generation, training and capacity building and advocacy and lobbying. And examples, women self-help groups. Only many countries have the women's self-help groups that focus on economic empowerment and wealth and education. Next one, farmers self-help groups, which is only related to the farmers. So they are focused on the agricultural development and marketing and advocacy. And youth self-help groups only focus on only youth problems, and that is formed by the young people to address issues such as the education, employment, and leadership development. So these all are the self-help groups. And next one, group lending. So what is that models of the microfinancial institutions? That is the group lending model, which is only providing the group of persons, and the individual lending model, it is only provide to the individual borrowers and require traditional collateral and credit worthiness of the assessment. Village banking model. So this is the community based model, and where villagers hold their services and provide the loans and the savings and other financial services. And next one is also cooperative model. So cooperative model is also members owned and managed and controlled by cooperative societies, that is also provide that financial services to their members only. And mobile banking model, so that is also provide the financial service, remote transactions, payments, or accounting management, and these all are the only through fly online platforms. And the next one, it is the finance was social enterprise model. So social enterprise model means combines a social mission with business principles, and which is also provide the financial service to the unreserved population. And what is the main aim of the social enterprises? That is model is the social impact and social financial sustainability. So these all are the finance micro financial institutions model. And history which is what is the first, it is started early beginning of micro financial institutions in India began in the 1970s and 1980s, but it is mostly with the establishment of the organizations in the 1990s and 2000. And main objective of the microfinancial, which is the development of the economy and the reduction of the poverty, and will be give the some financial product and services to their unreserved population and low in people and low income population. And it is also some institutions is more actively in India, that is the SKS Microfinance and Bharat Financial Inclusions and Badan Bank and Grameen Financial Service. So these all institutions more actively and providing funds and services to their clients. And this is also, and what is that objective? That is the main objective, reduction of the poverty. And the future microfinance in India is also established, and it is expand of the more activities and expand of the business in one country to another and one area to another and one state to another area. The first, it is the digitalizations of the every transactions and expansion to the new markets. At the same time, increased focus on the financial inclusions. What is the products? Micro loans and savings accounts and micro insurance and remittance. These all are the financial products in India. So which is also providing not only financial service, but it is also providing of the other service. That is the other service means will be give the health and wellness, and which will be give that means social services, at the same time financial literacy and means business training and conducting of the seminars, conducting of the workshops related to the means which is related to the other than finance, and which is also providing service to the agricultural sector, and which is also providing to veterinary services, and it is also providing to business means community development. It is also providing of the community development of service and business development services. So number of services is provided by the microfinance nowadays in India. So next must be uh, register with the RBI, and every report is also sent to the RBI, and must be maintaining of the every ratios, liquidity or capital or financial ratio and the asset quality ratio. So, but every microfinancial institutions must be send the financial statement to RBI. So that is the main activity of the microfinancial institutions. So sometimes RBI is also conduct the seminars, conduct the training programs, and conduct the some inspections, conduct the some audit in the microfinance. So total overall uh, two blocks. So yesterday and today we'll discuss the microfinance of the product. What is the objective? What is the characteristics? And what is the main role in India? So this is the total information regarding to the microfinance. Thank you.